So welcome to RANsquawk CE morning briefing for Friday the 26th of June 2009. We've just gone through 9 o'clock now, so we'll take a check through of where we stand in Europe and also some of the key headlines we've seen this morning. A bit of sentiment picked up as equities have followed the gains in the Nikkei overnight, and European bourses are trading up around 1% or so in the DAX and around 0.75% in the FTSE and CAC indexes. Chiefly buoyed at the moment by some decent gains in WTI crude futures, being buoyed by a weaker dollar and also by continued unrest in the Niger Delta. We've seen continued attacks by the militant group MEND in Nigeria on further Royal Dutch Shell pipelines, has driven prices in crude futures up around $1 in early trade. Oil and gas, basic material stocks also trading higher. Spot gold's also up around $6 at $945 last. We're just taking a look in terms of some specific headlines. Firstly, coming out of Asia, Japanese consumer prices fell to a record 1.1% in the year to May, growing signs of falling demand, pushing the economy deep into its second spell of deflation this decade. Analysts say that the BOJ may extend or may mull extending fund support steps, and we have seen the Japanese finance minister saying he will do his utmost to avoid deflation. A bit more of a positive note, we have seen a senior government official and economist in China saying that China's GDP will grow more than 8% in Q3 from a year earlier and over 9% in Q4. On the global front, some attention paid to an FT piece, obviously following all of the bank bailouts that we've seen across the globe. Russia looks set now to follow suit. Russia is considering an economic bailout plan. The bailout could go further than the US bank bailout, according to FT articles. In terms of US specific headlines, noting as well an article in the FT from the former Fed chairman Alan Greenspan. He wrote that inflation poses a major threat to long-term economic recovery and that its threat must be confronted. And also some comments at the US Chamber of Commerce, one of their economists saying the economy rebound could be choked off by raising rates and also rising inflation. In terms of ECB headlines, commentary coming from Stark, who said the ECB cannot keep up its support for the economy forever and will unwind measures when the economy improves. And we've also seen out of the major investment banks, Goldman Sachs and Barclays, saying they no longer see any more ECB rate cuts. We have seen some quite notable moves in gilt futures this morning. They have dropped mainly due to technical selling, reversing a lot of the upward move that we saw yesterday. However, analysts have noted some changes to the asset purchase facility that the Bank of England announced yesterday. They've said they'll now exclude the 5% 2014 and the 8% 2021 gilts from their weekly purchase operations, keep all under the scheme under review. Those two particular were two of the most highly purchased in the market, and thus some of that dampening in demand has been touted or highlighted by analysts with the drop we have seen in gilt futures this morning. Elsewhere, in terms of equity-specific news, one thing worth noting was UBS. They came out with an updated statement this morning saying they plan to raise 3.8 billion Swiss francs and they do expect to post a second quarter net loss. Although this was largely expected, we have seen the S&B confirm that this morning. Their shares did open up around 2.25%, however they have seen some volatility going through in the first hour of trade, and they are actually trading down around 2% at the moment, so a stock to keep a very close eye on today. In terms of the calendar then, looking ahead, we're going to be eyeing from the Eurozone, the German state CPIs. Bavaria is going to be the first one due today, that's at 11 o'clock London time. In the major data out of the US today, personal income spending, PCE, and we'll see the June final Michigan report.